Hi everyone and welcome to Inderes TV. Today we're going to talk about Tokmanni with analyst Olli Vilppo. Welcome.
Thank you.
And this has been discussed in the forum and on other channels as well, how you pronounce it correctly in Finnish, and it's really Tokmanni.
Tokmanni.
And how would you describe Tokmanni, a store, for a person who had never set their foot in one?
Tokmanni is the biggest discount retailer in Finland. In Sweden there is this dollar store, which is kind of similar concept, at least according to Tokmanni's management.
Yeah.
And in Norway there's Europris, and in UK is this P&M.
And what do they sell? Everything from shampoos to dog food and clothes in between?
Yeah, all of the chains have their own these kind of, how to say,
their own brands?
They have their own brands, which separates them from the other stores. Like Tokmanni has 30% of their own brands, these private labels, and they have these top of mind categories that they are really strong, and people usually notice Tokmanni of these categories. And in apparel, they are the second biggest in Finland. In gardening, they are the biggest one. Then they have also these top of mind categories like cleaning and washing, and beauty, and then do it yourself. And I think they had one other category, but it slipped my mind, so it's not top of mind.
Dog and cat food and...
Yeah, they have those, but it's not this kind of top of mind categories. But they have a lot of different kind of things.
A lot of different kind of things to a cheap price for the customer.
Yeah, and the leading thing is that the price is cheap. That's why it's like this discount retailer.
Yeah. And what are the sales channels? A lot of stores and...
Yeah, they have about 200 stores.
200 stores in Finland?
An online shop. They only operate in Finland, and they have told that they will have over 220 stores in Finland. But if you look at the map, it's pretty covered with Tokmanni stores, so there is not so much growth potential in Finland. And they are evaluating if they would go abroad, but they haven't told anything about this yet.
But it's still possible to buy online. But how big is the online business, and is that also just in Finland?
Yeah, it's also only in Finland. It's pretty small. Like in this business, it's just like 2% of the sales or something like this, and this is because the prices of the things you buy from Tokmanni are usually pretty low, so it doesn't make sense to buy it online, because then there's the postal cost is almost the same as the product. But
this is really a store you go into in order to buy all stuff.
Yeah, it's kind of like this, but it's also like this omnichannel approach that people can check online if the store has this stuff, things to buy, and also they can order it to the store and then go to the store to pick it up for free.
Yeah. So, but what if Finland is already the map is covered with Tokmanni? What are the growth potential going forward?
Their growth strategy is to focus on the customer, and they are expanding the categories they are selling.
They bought a shoe chain not too long ago.
Yeah, they bought a shoe chain, and they are planning to have the apparel category from the shoe chain, also some shoes to the Tokmanni stores, but they are still keeping this click at shoes concept.
As a separate chain.
Separate chains,
yeah.
and it has been also like profitable chain. So it seems like a good fit for Tokmanni. And also they are trying to get the growth from online, and also like in this discount retailing, like the brick and mortar is usually the way to grow. And there is still like 20 stores that they are going to have in Finland, but not so many. But like they try to sell more to the same customer.
And this inventory environment is really boosting this type of business, I would say, or
yeah, it's better for the discount retailers than the other shops, but it's not like an advantage still. Like the inflation shrinks the buying power of the people, so people have less money to spend. But Tokmanni is in better position than many others, and Tokmanni has like half of the sales is like this everyday goods, like groceries and toilet paper and
stuff you can't live without.
Yeah, and other half is this stuff you can live without. So the everyday goods have sold still very well, but the other ones haven't sold as well as like in this pandemic years.
Yeah.
But still Tokmanni is making a pretty good profits and good cash flow, and that's how they can pay a good dividend also.
So what about the competition? Because this is not an ordinary. I mean, this is quite common still. We have in Finland and in the Nordics, and I mean, retail to a low price worldwide is I mean, possible to buy for everyone. Is Tokmanni's edge here? If you pinpoint some.
Yeah, in like first we have to remember that the discount retailing grows faster than the other retail.
So it's the price again.
Yeah, it's the price, and the quality has improved. Like many of the products come from China, and the quality has improved, and people have like understood that the quality is better, and they start to buy these cheaper products. And Tokmanni's one competitor, this Puilo, is also like in Finnish stock market, and they listed 2 years ago, and in their like this prospectus, they had calculated that in Finland the discount retailing market has grown like 5% every year, which is much higher than the average retail that follows
the gross national product.
Yes.
Yeah.
And that gives like this kind of like growth driver that the market is growing, but there is a lot of competitors, and many of them come from Sweden. There is Rusta, Biltema, and Jula just came to Finland, but as the market is growing, then there is room for like different kind of
players in the
different kind of players, and all of them, their concepts are a little bit different. Like the top of mind categories are different.
The same customer group kind of still, but different top of mind.
Yeah, and if you think about the competitive advantages of Tokmanni, Tokmanni's revenue is 1.2 billion.
Yeah, let's talk numbers.
Yeah, so they have the biggest volumes in Finland, and they have this own distribution center, like in Mäntsälä.
Yeah.
And all the volumes go through it, and it's pretty efficient. And other players don't have this kind of setup.
So they have a sufficient setup with them, but they have also interesting distribution partners. Or
yeah, you mean this? They have this direct sourcing from the Far East.
Yeah.
They have in Shanghai and in Vietnam these own offices with Europris, and they can buy from there, especially these private labels. And the private labels are good for the retailers because they get better gross margins in the private label products, and usually it's cheaper for the customers also.
Yeah. So how big percentage of the revenue is by these private labels?
It's about 32%. Tokmanni includes also like the non-branded labels there, but it's about 30%.
Yeah. And those can provide real high margins.
Yes, yeah. And it's like a really good number. Like 30% is usually the level that other retailers target, but they don't have so high. But Tokmanni has been really successful with these.
Okay, that's interesting. So that's a real edge for Tokmanni as well. These are your own words. Tokmanni is doing right things in its strategy, but inflation still takes the edge of earnings growth, at least the coming quarters. Could you elaborate that a bit? The strategy and the...
Yeah, before last year when the inflation increased, they had every year this like-for-like growth was positive, like 2% or something like this, which was pretty good. And they improved their profits every year really nicely. But last year was that 2021 they had this EBIT of 106 million, but 2022 only 85 million.
So there's a real drop.
A real drop, like 20%, but it was not so bad as if you compare to other retailers, at least like in Finnish stock market.
And to pinpoint this drop, what is it about?
The biggest like headwind came from the inflation, because it lowers the purchasing power of the people. So it had the headwind on the revenues, but also it increased the Tokmanni's own costs, like rents and electricity prices and like transportation prices, and also like the purchase prices were higher.
And they were not able to raise the prices in the same.
Yeah, because the Tokmanni's customers want to get the cheap prices, and if you would raise the prices the same way that the costs have risen, it wouldn't make sense for the customers. So they kept the low prices, and it seems to be a good strategy in the long run. And this year, the purchase prices and the transportation prices have started to come a little bit down. So this year should be better year to Tokmanni, and they guide that the EBIT would be 85 to 100 millions. So they guide again that the EBIT would grow.
Yeah. So in comparison to, now I get the strategy part. You don't raise your prices in order to keep your customers, and when the costs go down, you still have the customers, and you kind of the margins go up as well.
Yeah.
Yeah. But compared to peers, what should the margins look like? What is good and what is satisfying?
There is like three very very good variety discount retailers in Finland.
Yeah. It's
Tokmanni, Puuilo, and Motonet. And Tokmanni and Motonet are making this about 7 to 8% EBIT margins, and Puuilo is making a double of this. But all the others are making a really low EBIT margins, like 2% or something like this. So these three players are the strong players in Finland, and other ones try to get more volume or expand their networks.
So saying it again, the guidance forward for Tokmanni on EBIT margin would be?
On EBIT margin,
percentage,
it would be pretty flat, but the revenue would grow. So the earnings growth would be like in the middle point, it's about 10%.
So top of the class still.
Yeah, and it's like the times are not so easy for the retailers, but if you guide that your results are going to get better, it's like a strong statement.
Yeah. So the guidance is really strong going forward.
Yeah.
So what about the valuation?
The valuation is pretty attractive. The price to earnings ratio is only 12, and it's pretty low because Tokmanni can pay almost all the results as dividend because there is not so many places to invest in the model, in the business model. So the dividend yield is something like 6%, and the valuation multiples are low. So, and if they get also this earnings growth that they guide in a longer term, then all the earnings growth would go to the investor because the valuation multiples are so low. So I would see that there would be more like space to have higher multiples than lower. And if you compare to our peer group, the peer group is valued like 20% higher than Tokmanni. But it's like one of the risks is where to get the growth after you have the 220 stores.
So and what happens next?
Yeah, what happens next then? But still, the current stock price doesn't include much like earnings growth in it.
Yeah. So pretty low valuation. And what's the recommendation at the moment?
The recommendation is accumulate and 14 euros the target price.
Okay. Thank you, Olli Vilppo, for all these comments.
Thank you.